Glad to greet you all. Hey there, it's Sive Morten with ForexPeaceArmy.com. As always, let's check out what's happening with the euro. Not much news today, honestly. It's Fed Day, they're deciding on interest rates, so the market's pretty quiet right now. Everyone is waiting for comments from Jerome Powell. Everyone's curious about how much Donald Trump's pressure on the Fed, especially on Jerome Powell, will influence his comments and the overall decision on interest rates, though the market isn't really expecting any changes today. Let's see. Yesterday, we discussed the decline that occurred after the signing of the tariff agreement with the European Union, and concluded that it might have more long-term negative consequences for the euro. Looking at how the market's moving today, I think these suspicions might actually be on point. After the drop and even after the market hit that support level around 1537, we're not seeing any kind of positive bounce whatsoever. Basically, the market just fell and is now sitting there. This is generally a bearish sign and an indication of excessive pressure from sellers. Typically, when the market hits these major support levels, it tends to show some positive reaction, some kind of bounce. We don't see this currently. So what we mentioned yesterday about a deeper dip towards the 1330-1340 range is still looking valid for now. There's a good chance we might end up with that downward ABCD pattern forming, heading toward that target we talked about earlier. I will show it to you again on the 4-hour chart. There's a market right next to the XOP now. Around 1345, really close to the support level and hitting oversold territory on the weekly chart. What will we do today? At the present moment, based on the current dynamics that I'm observing, I don't see any specific premises or foundations for potential deals to move forward. The only thing is, if you're trading on super small time frames, like 5-minute or 15-minute charts, you might want to try using this pattern that's not confirmed yet but could be forming. Watch that closing price. So if the market closes below the MACD indicator, then we've got a bearish grabber right here, and the market's gonna drop down. Those minimums will definitely get hit. What kind of drop will it be? Hard to say. It could accelerate downward, which is unlikely since the market is already oversold on the daily chart. Or it might just be a quick dip to the minimums to grab those stop orders that speculative traders have placed there. Either way, a grabber appearing here is bearish, so some movement is definitely possible. Next step, since we're still hoping for some kind of reaction here, we can watch for another pattern to emerge. This could be a double repo buy, since we've got a nice downward push going on. The upward trend that didn't quite hit that 30% correction mark here. So this is like your typical double repo situation. We have a close above 3x3 moving average here. So if the grabber kicks in, we'll end up with a close below. After that, we just need to wait for it to bounce back and confirm the pattern. If that happens, it might be perceived as a separate deal. Basically, you could try riding the euro up on that rebound. But this is all short-term, just for a few hours really, because looking at the overall market trends of this drop, we're still thinking there's probably going to be another downward correction wave coming. Everything we're talking about right now is just for day trading, maybe for today's session and tomorrow's. If double repo kicks in, we're looking at a target around 1640, 1645, which is basically a 50% retracement from that whole downward move. Looking at this hourly chart, you can see there's a triangle forming here, basically a pennant pattern. This is also a continuation pattern. So when I put everything together, I'm leaning toward the idea that we're probably going to see some more downward movement before anything significant happens. Or there will be some kind of bounce. Or we might see something else. I have no idea what Jerome Powell is going to say at his press conference today. If he comes across as super dovish, or maybe even if the Fed decides to cut rates, though that's probably not happening, then yeah, we could definitely see markets shooting up even more. Otherwise, most likely, we're going to end up with something like a double repo. Typically, these movements are done in a butterfly pattern. So quite often when a triangular formation breaks out, I'd even say it's pretty much the rule. They tend to show up as patterns like these. So if you're trading a grabber, you can just aim for the closest target since the market's already oversold. It's probably around 1504, 15 even. That's the butterfly's next target. So for this quick trade, you'll likely want to get out somewhere around that target. Basically, that's all we have for you right now. We need to see if there will be a correction and what kind it might be. Then we can carefully determine the optimal point to open a short position in order to continue following the downward movement. On the daily chart,